right. Looks like we have an update finally. Finally, an update. It's at 0.65 right now, which is about 27 points. We're still under the 43.30 level, so I think it's going to act as a resistance. Sorry about yesterday. I got caught up in that whole, what is it, Back to Work Act or whatever that Congress just passed. That's going to have a wide ranging effect, but luckily it's only on federal agencies and not on the market. But 10-year Treasury has been crushing this market. Why would you go into the market when you can invest in 10-year Treasuries at substantially higher returns with zero risk? Why would you do that? I don't know. Let's look at these levels right here. So it may be, I don't see this 4,300 as a level. Maybe this right here, this little week and a half, where it was hovering around 4,300, but I don't really see it. The next one I saw was this 4,100 level. So what I thought was once it broke through this 43.30, next stop is 4,100, maybe 4,150. But yeah, we're clearly right here making lower lows and lower highs. The 4-hour is kind of hard to see that trend. Let's see. That one's easy right there. But the 4-hour is a little difficult to see that. But anyways, what are we going to talk about today? Let's talk about implied volatility. Tesla has an update today, but since it hit this 300 mark, pulled all the way down to this 215, maxed out at 280, then took another step back. $40 change right here in September, which is a pretty big hit for Tesla. But let me show you what my positions are. So if you remember back a few weeks, last week? No, 2 weeks ago, before my vacation, I did these put credit spreads. Okay, it means I promised to buy at 180, and then I have an option to buy at 120, meaning I'm on the hook for $60 per share times 100 shares, which is cheaper than buying shares at two or just outright. Cheaper than buying shares just outright. And I have this fail-safe gap right here. Same with this one. I'm on the hook for 3,500, the difference between 130 and 150. But what I'm going to explain is all this right here. What does all this mean? So what I do is, in order to keep track of this, I build a spreadsheet. Big surprise, my wife loves my spreadsheets. No, she doesn't. She hates them. I say, look at my handy-dandy spreadsheet, and she's like, I don't care. Okay, so here's my puts for December. Short, when you're looking at your account, short's going to show a negative. Okay, this one means 100 shares. This long, it's going to show a positive, and this is also 100 shares. So each one of these is 100 shares. Okay, negative means you shorted it. What that means is you sold the option. So I sold a put here for December 15, 2023 for 180. Okay, I received. Now, this is how it looks on your account. This isn't a cash flow. I'll get to cash flow in a second. This is how it shows on your account. So it shows negative 192. That's how much I sold it for. Okay, I received that premium. Now, what it's worth is 275. So whoever's holding this, it's showing a positive 8270 for whoever's holding this, whoever I sold it to. Now, I bought the 120 to just in case Tesla blows through the bottom at 120 between now and December. And I bought that for $28, and it's currently at $32. So I'm showing positive on this at $3.30. So right now I could sell this for $32, and that would be a profit of $3.03. Now, here's the difference between the strikes. So I'm on the hook for $60 a share if it blows past this 120 to the downside. Um, my net cash flow was 163 positive. Okay, 163 went in my pocket for this. So I got $163 and I'm on the hook for 6,000, which is I think is a decent return because these can both, if you go back to those videos, the chances that these both expire out of the money is very high. Still need another $60 to the downside for this 180 to trigger, and it's gonna eat into my profits if I go down below 180, but it stays above 120. That'll eat into this profit. But what's good is as this one depreciates, this one will appreciate. So I can sell this one and go ahead and keep Tesla stock at 180 if I wanted to, and then sell this for additional profit. Because the closer I get to the 180, the 120 is going to appreciate in value. And let me show you what that looks like. So for December here, if I were to buy out of it today and say I don't want this trade anymore, it would cost me $243. It's the 270 that I have to buy back. This should probably be a negative, right? Buy back the 275 and then sell my 32 for a net loss of $79. So I can get out of this trade. It'll just cost me $79 on top of the 163. So I can pay 243 and then net loss is $79. But what I really wanted to get to was this right here. Okay. So December is not far away, right? And this cost and this value are associated with how far December is away. So since Tesla dropped, I think Tesla dropped, what's that, $40 share off of 280. So 40 divided by 280. Tesla dropped 14%. Okay. Tesla dropped 14%. And this appreciated 46%. So that's where options and volatility can really move these prices. So that's why instead of buying the stock, people buy this option right here, and now he's up $82, which is 46%. This person's up 46% on this, and mine is way far away. It's 60. It's over $100 away from this strike. So mine moves, but not as much because the strike's further away. So mine only appreciated by 275. But my hope is that both of these expire out of the money. Because even though he's up right here, $82, if we pass this December 15th and it's not below this strike, he loses all of that money and I keep all of this money. So further away, let's go to this one. I already explained what all these are. If I were to get out of it, it would be a net loss of $51. This person is up $55.70 on this one that I sold him, and I am up $4.30 on the one I bought. Now, see this right here? Since it's further away, since it's a month past December, it moves less. It moves less. So it's 165. That's only 24%. That's because the strike is lower and the time horizon is further. The strike date is further. Whereas this one is higher. The strike is higher than 120, but it's further out, so it moved 5%. So you can see 45 to 24 and 2 to 5. And that's why these spreads are incredibly important, because the chance that these go out of the money in December is a greater chance than if they go out of money in January. And that's why I only decided to be $35 per share on the hook, whereas I'm willing to do $60 a share on the hook for this one, because something catastrophic would have to happen in December 15th for something for this to trigger, whereas this could be a little bit slower of a bleed, and so I'm going to be off the hook a little bit for this one. So that's Tesla spreads. That's what they look like. That's how they move, and that's the video.